Greetings from sunny Northern California. Cows are coming home from the mountain ranch and we are waiting for rain, but remain thankful that this year's wildfires did not impact us, despite coming close to one of our winter ranches. And I'm eager for the day that I can be with you again in Seoul, but for now we will do our best with the virtual updates. It's hard to believe that I have not been on a commercial flight since our staff conference in Mexico City in January. Korea was supposed to be my next trip at that time in February, and we know the rest of the story. There are nonetheless plenty of topics to cover, so let's start briefly with the macro situation and then into the beef details, and we will finish with pork. The global economy is expected to contract by 4.4% this year and rebound by 5.7% next year. China and Vietnam are among the only countries expected to have positive GDP growth this year, followed by a strong growth in 2021, due partly to the limited impact of COVID-19, first impacted, but first to come out of the lockdowns, especially in the case of China. For Korea, GDP is expected to decrease by just 1% and to rebound by 3.2% in 2021. Japan sees a bigger impact this year with GDP down 5.6%, but to rebound by 2.7% next year. So overall, a much lesser impact in the Asian markets than we see in the US and in the Americas, as well as Europe. For higher income households outside the EU, China, and the United States, Japan and Korea have the largest high-income populations, and Korea is expected to add about 1.1 million households with income over $25,000 US by 2024. Indonesia is expected to add about 2 million, and for the US, about 2.4 million, and EU just under 2 million households to be added to that high-income category. For contrast, China is expected to add 38 million wealthier households and remains obviously an important economic driver. The pandemic drove trends that were already underway for shifting toward online and convenience, but it upended the restaurant industry entirely. Retail grocery sales grew in 2020 and estimated up 3% for the year, but food service sales dropped by an estimated 23%, and by 2024 are expected to be just 4% larger than in 2019. Delivery food service grew by 31% this year and e-commerce by 51%, while ready meals increased by just 10%. Double-digit growth trends are expected to continue for delivery and e-commerce as we look out to 2024. So if we contrast the global trends with those for Korea, they are a bit different, with the more modest decrease in food service in Korea estimated down about 7%, and to rebound strongly in the following years. But modern retail sales are estimated down 12% this year and to remain below 2019 levels by 2024. This is offset by continued strong expected growth in e-commerce, up 21% this year, but then more than doubling comparing the 2024 forecast to the 2019 sales. Food service delivery offset part of the overall decrease this year, and growth is expected to continue as consumers favor convenience and being at home. Full-service restaurant sales were especially impacted this year, but even in North America with a higher share of limited service, total food service receipts are estimated down 25% for this year. China is the largest food service market, and its sales are estimated down 20% and forecast to rebound strongly, as we already see clearly underway. We were just on a call with our China team, and they again report strong food service sales in the Chinese market, and this is helping to especially underpin demand for grain-fed U.S. beef in that China market. Korea has a larger share of home delivery compared to China and Japan, but dine-in is expected to rebound somewhat, again looking out to 2024. The shift to e-commerce had already been underway in Korea, and sales are expected to more than double by 2024, even after strong growth this year. On a per capita basis, Korea has the highest e-commerce spending at about $303 per person in 2019 and estimated to more than double by 2024. All right, shifting gears to the supply side, global meat production is estimated down 1.5% this year, but expected to increase by 2.8% in 2021, although still down 1% from 2018 levels. Pork is still 9.5% less than 2018, or pre-ASF. Much of the increase in 2021 global production is expected to come from a rebound in China's pork production of 9% to 41.5 million metric tons, but still less than the 54 million metric tons produced in 2018. Global beef production is estimated to rebound slightly on larger production in North and South America, but overall supplies remain quite limited, with production below 2019 levels. For U.S. beef and pork, production are expected to be record large in 2021, and this will help to underpin larger U.S. exports of pork and beef, as has been the case over the past several years. For example, comparing 2019 production to 2015, pork increased by 13% and beef by 15%, while 2019 exports of pork and beef were 23% and 24% larger than in 2015, respectively. 2021 beef and pork production are each estimated up about 1%, and so you can see these record levels expected to be set here in 2021, and even as we speak, U.S. pork production is setting another record here in 2020, while U.S. beef production is pretty much flat with last year. U.S. year-to-date pork production is up 1.8% from last year, with slaughter up 1%. Pork production has been up sharply higher than last year every month except for April and May, when plants were adjusting to keep workers safe from the coronavirus. Production in the fourth quarter could be slightly lower than last year, with harvest peaking thus far at 2.7 million head per week, and that was for the week ending October 10, and holding just below that level in the following weeks. Last year, fourth quarter harvest averaged 2.7 million head per week. Limited labor continues to impact production of certain cuts, especially boneless trimmed and further packaged products. The spread between bone-in butts and boneless, for example, remains wider than the typical average for picnics. And the spread has narrowed recently, but had been historically wide, meaning bone-in product is available at lower prices, but boneless product is limited in production and thus higher priced. So we're tracking here both the bone-in butt and the boneless butt specifications, and then the red line shows you the spread between bone-in and boneless. And you can see that it has trended generally higher than the historical average, and similar trends for the picnic, with a wider spread or a higher relative price for those boneless specifications rather than bone-in. And again, this is mostly due to limited labor, and with the situation obviously even more severe with the COVID-19 and workers' fear of coming to work and just challenges in doing as much added value as we've been able to do, while also increasing production and kill levels to their seasonal highs that we see here in the fourth quarter. The pork cutout has trended higher since summer and neared $1 per pound, averaging 97 cents per pound in late October, up 27% from last year, and the highest October price since 2014 PED-induced supply shortages globally. There are several reasons for the current high prices, including strong U.S. retail demand, strong export demand, limited supplies in freezers, limited production of boneless product, driving higher values for those components of the cutout, and limited overall slaughter numbers, keeping production possibly below year ago through the end of the year. And so I added this price point here for the cutout today, Thursday, and it has slid to about 87 cents, down from a peak of 97 cents. Still bouncing around on a daily basis, but there's a chance that we've seen these prices peak, at least for now. And part of this that we're seeing at the moment is a softening of belly values, as those prices had really jumped and are now moderating. But it's also noteworthy that our inventories in cold storage in freezers have been very limited, and that's been part of the reason for the run-up in prices, as U.S. retailers as well as international customers have been buying strongly going into the winter and into the holidays here. On the beef side, year-to-date production is down 1.2% from last year, with slaughter down 3.8%. So we've been able to offset some of the decrease in cattle slaughter by much heavier weights, and that's helped to limit the overall production decrease. And you can see in most of these months, following the April and May decreases, we've seen stronger production on the beef side as well. Cattle on feed totaled 11.7 million head on October 1. The inventory was 4% above October 1 of 2019 and 8.5% above the 5-year average. This is the highest October 1 inventory since the series began in 1996. And the inventory included 7.3 million steers, up 6% from the previous year, accounting for 62% of the total. Heifers accounted for 4.4 million head, down slightly from last year. Placements in feedlots during September totaled 2.23 million head, and 6% above 2019, 10% above the 5-year average. And drought and dry conditions in the U.S. Have contributed to higher placements of these cattle into feedlots than expected during September. So as cattle are brought home, just as I said is happening here on our ranch, then these calves are weaned, and if pasture is available, they can go into what we call stalker operations. But when grass is very limited, they go directly into feedlots at weaning or after they come off the range, and that's what we're seeing here this fall. Supplies of cattle on feed over both 120 days and 150 days dipped below year-ago levels in October, indicating that the backlog of cattle has been worked through and following the rebound in production basically from June after those sharp decreases in April and May. The beef cutout has been slightly lower than last year, partly reflecting the challenging food service situation and at the same time the strong rebound in U.S. beef production and rebuilding of freezer inventories. The normalization in supply has contributed to normalization in U.S. prices, but U.S. demand for beef remains strong, and an uptick in exports could support prices into 2021. And even as we speak, we've seen the cutout rebound and trade a little bit higher this week, and there is potential to see some higher prices again ahead of the U.S. holidays. All right, let's shift into the global beef update. And part of the reason for the expectation for strong U.S. beef exports in 2021 comes from the expected shortage in Australian production, which is underway now. Meat and Livestock Australia's October estimate shows 2020 beef production down 15% and a corresponding 17% decrease in exports. And the decrease in production follows 2 years of drought-induced elevated slaughter levels and now dramatically improved conditions, as you can see in the weather mapping here. So much of the country seeing good moisture in the July to September period, and then a very good or wet rain outlook for their summer or November to January. So going from some of the worst conditions to some of the best conditions has meant that instead of sending cattle to market, including females, they are keeping them and trying to rebuild the herd following this kind of liquidation period that we saw over the prior 2 years. And in the short run, that limits production and exportable supplies. Australia's cattle on feed inventory has also contracted, and mid-year inventory of just over 1 million head was 12% less than last year and 7% less than the prior quarter. The strong demand for feeder cattle to replenish herds has pushed those prices to new highs, and at the same time, the grain-fed premium has also narrowed due to overall limited cattle supplies. Profit margins for feedlot operators are thus reduced, and this could limit Australia's grain-fed production in the near term. Through September, Australia's beef exports were down 11% from last year's pace, and exports slowed dramatically from July, dropping 31% in September with lower volumes to basically all markets. So we've really seen these decreases take off from July, dropping by double digits compared to last year, and noteworthy, especially a steep decrease to China, but really across all markets. Australia's cattle prices are the highest of the major exporters, up 22% compared to last year, But prices are also higher than last year in Argentina, up 25%, Brazil up 16%, and Paraguay up 4%, despite significant currency devaluations in those countries. Strong export demand and limited production have supported South American cattle prices. The exception is Uruguay, which saw historically high prices last year, and this year limited production due to herd rebuilding and a rebalancing of the industry as Uruguay's cattle prices remain higher than their neighbors. So moderation in prices in Uruguay for a variety of reasons, but still seeing higher prices than the other South American suppliers. And again, the shift that we see here with now higher cattle prices in Australia than the United States really shows our supply advantage in the most basic form, in not being at the cattle price level. For the top exporters, beef and variety meat export volume slowed in the first 8 months of the year, but that was mainly due to supply side issues and not reduced demand. Brazil and Argentina continue to export more, mainly to China and benefiting from their currency disadvantages. Exports decreased from Australia, the US, India, Canada, and Uruguay, but each of these countries had reduced production, which had a negative impact on exportable supplies. Top exporter shipments to China and Hong Kong were up 24% to 1.77 million metric tons. China and Hong Kong accounted for about 31% of global beef exports through August, and that's up from or compared to a 24% share last year. Growth to China and Hong Kong has come mainly from Brazil and Argentina, and from a host of smaller suppliers, as you can see in the table, along with India, which now reports shipments to Hong Kong, but still not to China specifically. Exports outside of China and Hong Kong fell by 13% to 3.96 million metric tons, and there has been some shift in exports to the US and Canada, partly in response to our temporary hike in beef prices when our supply chains were adjusting. And the growth in imports into the US and Canada came mostly from New Zealand, Mexico, Uruguay, Argentina, and the EU. And it was also partly offsetting the anticipated decrease in Australian shipments into North America. So again, we have seen strong demand for beef here in the United States, and our high prices help to pull more product into this country, while at the same time our exports, even outside of China and Hong Kong, decreased in the short run, although we're seeing that momentum pick back up as we speak. China's import data shows volume up 37% through September, reaching 1.59 million metric tons, of which South America supplied 71.5%, and Australia and New Zealand a combined 22.5% share. And the data implies the majority of China's imports are grass-fed, with grain-fed accounting for just about 4% of import volume, and mostly coming from Australia, the US, and Canada. Australia's decreasing production, plus the fact that several important plants are suspended for export to China, contributed to sharply higher prices for a limited supply of Australian beef in the China market. This price trend contrasts with prices for South American beef, which have trended lower after peaking in late 2019. And US beef remains at a sharp premium to the other suppliers in the China market. And at the same time, our US weekly export data shows that weekly shipments to China, as well as net sales to China, have been trending higher and setting new records. And in today's report, new purchases from China were about 4,200 metric tons, and they were the largest destination for new bookings of US beef, again in the report released today by USDA FAS. So this momentum to China has been continuing, and we see them being a big growth market for US beef going into 2021. So the Phase 1 agreement between the United States and China included provisions to significantly increase the eligible supply of cattle, US cattle, for the Chinese market. And it has taken time, but this new supply chain is being expanded, and we expect volumes to China to continue to increase as there is strong demand for grain-fed beef, and as China's food service industry is booming again. So through August, the growth in US beef exports has actually been mainly to Japan, And this chart shows that data just January through August over the past 4 years. And you can see Korea holding quite strong near these record volumes, Japan rebounding with the implementation of the trade agreement, and some growth into Canada, growth into China and Hong Kong. And we basically expect a rebound in U.S. beef exports in 2021. So this chart shows the tonnage growth or the change in U.S. beef export volume through August. That's your blue bar. And then our expected, lost my cursor, our expected increase for the calendar year of 2021 is noted here in the green bar. Japan, Canada, and China led the growth in U.S. beef exports so far this year, and USMEF expects China, Japan, and Korea to lead the growth in 2021, with a possible rebound in U.S. exports to Mexico as well. Overall, 2020 exports are estimated down 2% to about 974,000 metric tons, but expected to rebound nearly 9% to 1.06 million metric tons in 2021. And this does not include variety meats. This is just cuts. And I've noted here the variety meat tonnage for your reference as well. For Japan, we see a rebound in U.S. market share following implementation of the Japan-U.S. trade agreement on January 1, which eliminated the tariff disadvantage for U.S. beef, and we now benefit from Japan's phasing down of tariffs on beef imports from the high level of 38.5% to now 25.8%, reducing to 9% over several years. And like many markets, Japan's food service sector has been hard hit by the pandemic, and related reductions in operating hours have been especially challenging for pub-style operators. While quick service and fast casual restaurants have been less impacted and are recovering, along with fine dining, which had been impacted by the lack of travel and tourism and business meetings in the central business district. Retail sales, on the other hand, have surged, and especially for meat, still up 7% and above the overall retail sales category for the month of August. The growth in retail sales has mostly offset the decrease in food service demand, with Japan's consumption of pork actually increasing somewhat this year and beef just down slightly. Japan's chilled beef imports through August were down 5%. With a 4% decrease from the U.S. and Australia down 8%. And the trends vary by cut, but overall imports of chilled short plate and brisket cuts increased, while imports of chilled chuck, round, and loin cuts decreased. Frozen imports were up 3% and included a 15% increase from the U.S., which offset the 10% decrease from Australia. Again, the growth was in the short plate category. Short plate remains a popular cut for the Gyoidon beef bowl restaurant chains, which are quick service generally and offer takeaway and delivery options as well. So retail demand has also held strong for short plate, being a thin sliced and quite convenient item for home cooking, as well as being affordable. Also note that beef trim, dominated by Australia, was even with last year, and several restaurants or several new entrants, including the EU, US, Mexico, as well as New Zealand, are eyeing Japan's trim market due to anticipated shortages out of Australia. McDonald's and other burger chain restaurants have fared quite well, again benefiting from their takeaway and quick service models. Customs clearance data shows that Korea's imports of chilled and frozen beef were down just 1.5% from last year, as growth from the US, up 4%, offset decreases from Australia, down 8%, and New Zealand, down 13%. So opposite of Japan, Korea's growth has been in chilled beef imports, up 11%, and dominated by the United States, up 15%, and demonstrating the strong demand for beef at retail, as well as sustained food service demand. Korea's frozen beef imports slowed by 4%, but that decrease was from Australia and New Zealand, while imports from the U.S. were up slightly. Prices for frozen U.S. beef in September were even with last year, while prices from Australia were up 6% from last year. The volatility in U.S. chilled beef prices shows the impact of our supply chain challenges, which drove record beef prices here in April and May, and a peak in import prices in July, as it takes time for the supply shock to travel through the entire chain. The recent reduction in prices and more favorable U.S. pricing versus Australia should mean further opportunities for U.S. beef in the Korean market. And USMEF expects a slight reduction in Korea's total beef imports this year, but an increase in U.S. market share this year and again in 2021. Chilled beef imports are expected to set another record, despite pandemic challenges to both supply and demand, and U.S. market share has increased to 64%. On a cut basis, quarantine clearance data shows reductions across the categories of U.S. beef, with the exception of shoulder clod increasing 16% as an affordable and versatile cut, taking share from Australia, including for bulgogi. From Australia, imports also decreased across most cut categories, except an increase in ribs, which reflects some of the shift in Australian beef away from China and into the Korean market. The decrease in loins shows the impact of restrictions on banquets and other large events, as well as for the challenges to full-service restaurants with limited travel, business meetings, and tourism. Like Japan, Korea's imports of Australian trim in the other category for burger restaurant have held strong, with the demand for burger restaurants, again, mainly quick service and takeaway or delivery, and that has helped underpin demand for Australian trim. Across the major Asian import markets, U.S. continues to dominate the grain-fed imports in Japan, Korea, Hong Kong, and Taiwan. China has been the exception, but momentum is gaining for U.S. beef as imports from Australia slow for the first time. U.S. beef is currently not facing tariff disadvantages in any of these major markets, which is a major change from this time last year. Overall, global beef exports are expected to slow by 2% this year, but to rebound by 6% and set a new record in 2021 at more than 8 million metric tons, with China continuing to underpin global demand. Exports to China and Hong Kong are estimated up at least 8% this year, stronger growth into China specifically, and to increase by about 6% next year to roughly 2.38 million metric tons. And this is just from the top suppliers, although as noted earlier, there has been strong growth from a number of smaller suppliers, which will add to the total tonnage of product going into China and Hong Kong. Because beef production is not growing significantly and global demand remains strong, especially the growth from China, consumption or supplies per person in the major exporting countries have been decreasing. So this is not a measure of demand, but a measure of supply availability. U.S. demand for beef remains very strong, but export growth has kept supplies per capita relatively steady, even as our production has grown. Other exporters have shipped even larger shares of their production overseas, leaving less in the home market, especially in places like Australia, Argentina, Uruguay, and New Zealand. Higher bids from international customers have left less beef for the domestic consumers, and in the case of Argentina and Brazil, challenging domestic economic situations and currency devaluations have made exports more profitable than sales at home. All right, let's shift into the global pork update. And you know I'm going to start with China. China continues to dominate the global pork scene, and now the focus has shifted, notably, to China's production rebound. 2021 production is anticipated to be up nearly 10% from the 2020 low, and corresponding imports are expected to drop by about 25%. So I'm showing you this same data as we mentioned earlier, only this whole chart is in product weight because that's what we are used to referencing for the trade for exports. Consumption is expected to increase by about 4%, but still be about 6 kilograms per person less than in 2018. This chart shows, again, product weight, but China's pork production in carcass weight was 54 million metric tons in 2018, or pre-ASF, then was estimated at 42.55 million metric tons in 2019, then bottomed out at 38 million metric tons this year, and to increase to 41.5 million metric tons in 2021. And this is according to USDA Foreign Ag Service estimates. So 2021 production is still expected to be down about 23% from pre-ASF. USMEF estimates that imports will account for about 15% of China's consumption this year, and close to 11% of 2021 consumption. Imports were just 5% of consumption in 2018, and it's China's goal to return to that balance. Global exports of pork this year are estimated up 19% from last year, totaling 8.4 million metric tons, an increase of 1.35 million metric tons as the growth to China is partly offset by decreases to other markets. But in 2021, USMEF expects a reduction in China's import demand to mean about 8% less global pork exports, or 7.7 million metric tons, with growth to most other markets only partly offsetting that slowdown into China. It is possible that Europe sees the biggest decrease in exports next year because they are the biggest supplier to China. Their exports grew the most. Their production decreases this year by about 0.5%, and it's expected to decrease again next year. And because of ASF, most notably in Germany, and because there's room to consume more pork within the EU. And on the other hand, the US and Brazil possibly still see modest increases in our export volumes in 2021 due to favorable supplies and for Brazil a continued currency advantage. So similar to the chart on the beef side, this chart shows pork supplies per capita, again implied consumption, for China and the major exporters. Clearly, China's consumption has dropped with ASF reduced production, but it was also trending lower prior to ASF, and we expect a continued rebound from the 2020 lows, but not back to 2014 levels, as China's protein sources have diversified to favor more beef as well as poultry and sheep meat. For US, strong production growth has largely gone to export, leaving relatively steady supplies for domestic consumption, even as demand remains strong, as we are seeing currently, with pork favored for cooking at home and as a convenient item with processed products such as bacon and sausage. For the EU, huge export growth and slightly smaller production leaves less pork on the internal market this year, but more is expected to stay within Europe and be consumed within Europe next year, due partly to African swine fever in Germany and to a reduction in China's overall import demand. Supplies have also been quite tight in places like Canada and Chile, with strong export growth and more limited production growth. Of course, the biggest recent impact to the global pork trade has been the finding of African swine fever in Germany across the border from Poland on September 10th. Germany is the biggest pork producer in the EU and the second largest exporter after Spain. They account for roughly 20% of EU production and exports. Germany was about 9% of the global pork trade, and Germany's exports were mainly to China, where they accounted for 14% of China's import volume. Their next largest market was Korea, where Germany held about 20% import market share, and Japan was also important, although Germany held a much smaller share of Japan's imports, mainly shipping frozen bellies and loins and ground seasoned pork. Germany continues to work to get trading partners to accept regionalization, but for now, about 1 million metric tons of pork and pork variety meats annually are stuck within the EU that would have gone to third countries and largely to China, Korea, and Japan. This means that other major EU exporters, as well as North and South America, will be aiming to fill the hole for German pork in China, Korea, and elsewhere. Germany's hog prices dropped 14% week on week with the announcement, but have since mostly stabilized, and in mid-October were 30% below last year, averaging 132.4 euros per 100 kilos. The EU average was down 23% from last year at 141, and EU piglet prices have also dropped on concerns about the future, and the EU Commission expects EU pork production down 1% in 2021 after modest reductions this year. And exports are estimated down 10% in 2021 after strong performance this year, although slowing in the fourth quarter due to that German ASF finding. The European industry faces a wide range of challenges as ASF continues to be active in Eastern Europe, but also Brexit uncertainty with about 1 million metric tons of pork traded between the UK and the other EU member states, and also policy uncertainty related to the Commission's farm-to-fork strategy and separate animal welfare and environmental restrictions impacting in Germany, plus new labor rules limiting contracted labor, which had been mostly coming from Eastern Europe. Global pork exports through August were up 25%, or an increase of 1.45 million metric tons, and included double-digit increases from all the major suppliers. This growth was, of course, driven by China, to which exports were up 82% to 4.12 million metric tons. China-Hong Kong accounted for 56% of pork trade for the first 8 months, up from 39% in the same period last year. U.S. exports to China and Hong Kong more than doubled, with market share of 17%, while the EU accounted for 55% of exports to China and Hong Kong. Similar to the situation for beef, exports of pork outside of China and Hong Kong were down 11% to 3.19 million metric tons, and all major exporters shipped less to markets other than China and Hong Kong, meaning China bid product away from the other markets to help offset its supply shortage. The exceptions were Mexico, where exports increased to Japan and the US, and Russia, from which exports increased to Vietnam and the Ukraine. Global hog prices mainly show the tight supply situation in September, with still higher prices in China and Vietnam, reflecting the impacts of African swine fever, but also strong prices in Japan and Korea, with preference for cooking at home, and in South America, as strong export growth tightened supplies in Chile and Brazil. There has also been a notable rebound in prices in the US and Canada, with the combination of export demand and strong North American retail and quick service restaurant demand, including for products like bacon and ham. Mexico's prices have moderated on strong production growth and a weak currency, because these prices are in US dollar terms, and challenging economic situation. For the EU, it's ASF in Germany. The China price trend has changed in recent weeks, and prices are now lower than prior year for the first time since early 2019. China's live hog price has been trading in the 28 to 29 RMB per kilo range, close to US $2 per pound, and in late October was down 25% from last year. The pork price is also trending lower, but was still up slightly from a year ago in mid-October at 50.56 RMB per kilo. The production rebound is difficult to quantify, but lower prices are attributed to such a rebound. At the same time, China's economic growth could help to offset. GDP grew by nearly 5% in the third quarter, and that was up from 3.2% in the second quarter. And this is compared to year-ago levels, so not quarter-on-quarter, but year-on-year growth. Lower hog prices in China and higher prices in the United States mean more limited opportunities for margin-based purchases, especially since the U.S. still has a retaliatory duty disadvantage of 25% due to the Section 232 metal tariffs. But overall, the wide spread between China's domestic pork prices at wholesale and imported pork prices have continued to drive large import volumes and importer profitability. Prices for both are well off their highs of last year, but the spread is wide, and frozen imported pork has found demand from a range of users at these relatively affordable price levels. We also see China shifting back to a more normal import pattern, with less frozen six-piece carcasses purchased from the United States, dropping from the peak of 37,000 metric tons in December down to just about 2,600 metric tons here in August. But we also see sustained demand for a wide range of cuts, including bone-in hams and picnics, as well as some loins, bellies, and butts. So the market is basically shifting to a more normal pattern where importers buy the cuts preferred by the market when prices are preferable and seasonally fitting. Vietnam is another example of the ASF impact. Shipments of pork and pork variety meats to Vietnam were up 90% to 171,000 metric tons through August, including strong growth from all main suppliers and relatively new entrants like Russia. Vietnam's hog prices have also started to cool somewhat, but import demand is expected to remain historically high in 2021, assisted by economic growth as well. Korea's imports of pork and pork variety meat slowed this year, down 21% through September based on customs data, due to larger domestic production as well as inventories from large imports in the prior 2 years, and of course the slowdown in food service and related demand. But U.S. market share of Korea's imports has increased and was 39.5% for January through September, up from 35.8% in the same period last year, as imports of U.S. pork decreased by a more modest 12.6% to 135,665 metric tons. And again, this is on customs data. Also noteworthy that we continue to supply picnics and butts, while Europe is heavy on bellies, and of which Germany was a huge supplier. And will be interesting to see who substitutes in for that product. U.S. exports of pork through August were up 22% and included variety meats up cuts were up 22% and including variety meats, the total was up 17%, led by a more than tripling of exports to China and Hong Kong. But exports also increased for Japan, Canada, Central America, Caribbean, Dominican Republic, and other smaller markets, signaling the widespread demand for U.S. pork. The growth to these other markets is expected to intensify in 2021 and to offset a reduction to China and Hong Kong. USMEF expects U.S. pork exports to end this year up about 16% and up about 12% when we include variety meats. Next year, exports are estimated up modestly with widespread growth led by Mexico, Japan, Southeast Asia, South Korea, South America, and Australia. So again, next year we see China slowing down, possibly even more dramatically than what we have forecast, but growth from basically the rest of the world to narrowly offset the decrease in demand out of China as we see record U.S. pork production and that affordable product being available for the world. So again, in summary, African swine fever remains a major driver to global pork trade. But in 2021, we're going to be talking more about the rebound off the 2020 low in production. And still, it remains a bit uncertain, especially with the activity in Eastern Europe and, of course, the findings in Germany. At the same time, we have the U.S. supply advantage, again, record large production in the United States, and contrasting with, especially on the beef side, the situation in Australia, where production may stabilize next year, but still talking about being at least 15% lower than what we saw last year. And the China factor, again, the phase one agreement between the United States and China was a huge change, especially on the beef access side. So we do see growth in U.S. beef exports to China continuing with a wider number of our cattle now eligible for China. And contrast that with the pork side, where we see China's imports from the world and from the U.S. slowing down as their production rebuilds. For Japan, the Japan-U.S. trade agreement, those tariff reductions benefit this year and, of course, notched down again on April 1 of 2021. And we do expect continued growth in U.S. pork and beef into the Japanese market. And in general, we're seeing obviously a second wave of COVID-19 in the Americas and in Europe, but not so much in Asia. So it looks to me like favorable opportunities in the Asian markets as you have more successfully gotten through the pandemic, and potential for bigger economic growth and hopefully sustaining demand for U.S. red meat, especially hopefully as food service is able to recover even further next year. So with that, thank you as always for your continued support of U.S. beef and pork. From my family to yours, wishing you health and happiness in this most challenging year, and best wishes for 2021. Thank you so much.